It is the first trading day of June, and we're entering what can be historically a tough period for the TSX. The highlighted yellow portion is where we're currently entering. So we could be in for a period of weakness. Certainly, we're already seeing that on that first trading day. But our next guest has got a couple of stock ideas that could help buck the trend. Let's bring in Sid Mokhtari, Chief Market Technician at CIBC Capital Markets. Thanks so much for joining me.
Thanks for having me.
So, you know, Canadians love to talk about the weather, but so do market technical analysts. You talk about seasonality. June, not so hot for the TSX.
Very true. I mean, we adjust seasonality for momentum factors as well as, different cycles in, election periods in the U.S. And we find June to be a tougher period in the first 2 to 3 weeks, and then back end of it becomes stronger. Generally speaking, it's a mixed month, so people should be, if you're a stock picker, that could work in your advantage. If you're a passive investor, just be mindful that broad index is probably under pressure for the next couple of weeks.
I'm glad that you brought up the election cycle. Are we on track with the typical election year? Maybe we'll look at U.S. equities as a better benchmark because it's supposed to be great for the market.
Yes, I mean, Q1 and Q4 are historically the strongest quarters in the year. Q2 tends to peak the breadth. Q3 is a softer period. We are seeing the same set of readings that is coming from the breadth factors. We think breadth has peaked and market will become narrower as we go into the summertime. So to your point, you're seeing some cyclicals coming under pressure. Defense probably, backing up here. And that we're seeing it in healthcare, some of the utility names in the U.S. So I would say that's the narrative that we're seeing. We see the footprint is there.
Let's take a look at that U.S. presidential roadmap because it really does show, kind of what you're talking about. There we are. I guess we were kind of at the dip.
That's correct. So the first one, the first quad that you have on your on the chart there, election year, you can see that dip that falls below the zero line. That's your negative backdrop rate of change. Hit rates actually drop to about 50%. So in other words, you don't have a lot of positive odds of outperformance. So we're not surprised as to what we're seeing. We've had a great quarter. We saw follow through in May, but it's getting narrower from a performance perspective.
I'm glad that you brought that up. There's a lot of different ways to measure breadth. One that many people are using is how the S&P market weight has performed against the S&P equal weight when you neutralize the impact of the big companies, and that equal weight is underperforming by the greatest magnitude since the financial crisis. Anytime you bring up 2009, you think this is no good.
It's a very narrow leadership in the market from a AI perspective, if you will, right? And they are the largest size cap in the U.S. and that's why you're seeing market cap exposure is probably better than equal weight. Equal weight is very good when breadth begins to broaden out, and we saw that in Q1. And
we thought that was going to be the time,
starting
right?
to. Yeah. And then as soon as we saw some let's say weaker data set coming from the U.S., you saw things come off again, and we saw leadership coming back into the large caps.
And so some people might take comfort. April was weak, then May was strong, so everything's fine, except the characteristics of the May rally are super defensive looking.
Very much so. I mean, I don't want to, downplay what we did in May. I thought it was good because you can still do well if you're in the right areas of relative strength of the market. But I do want to say, to your point, that AD lines have backed down. Number of 52-week highs, exactly. The 52-week high lows were at a lower high. To your point, what we talked earlier, in May, equal weight indices made fresh new lows relative to cap weight indices, right? So that all tells you that breadth is narrowing, if you will.
Okay, so this brings us to charts that you've brought along, areas to look for outperformance within the financials. I mean, we just got through bank earnings season, and it's interesting that you only got one bank out of the financials that you think could potentially do well this month?
So we run all the banks into our matrix process that we have, and Royal came out very strongly in both absolute and relative terms. A strong momentum, a strong alpha, horse, in my opinion. It's got a lot of power in alpha terms and came up at number one in our basket. So we added Royal, and of course CIBC was number two, and then National 3.
Yeah.
I do suggest that people should focus on the best three, in my opinion, as opposed to focusing on the laggards, because that's a loss of alpha, unfortunately, if we go after the laggard group. So I would say that
within financials, though, you broaden out to a Brookfield, to a Power Corp.
Yes, I mean, you don't want to just be in the banks. I mean, you want to broaden yourself out in this environment. And BN is a good chart. It's a good technical name. We like it. It's a bit of a macro kind of a chart, not necessarily individual or stock specific, but it does have all the right technical backdrop. And Power Corp has been emerging positively. A lot of, likes of Power Corp have been coming out, non-banks types that have been emerging, and we chose Power Corp because of its strength.
You have three charts in the energy sector, each in very different parts of the energy sector that are looking good. ARC, more of a natural gas play.
I like natural gas in this environment. Now for nat gas has been improving somewhat, right? And we see ARC as a leader in that space, right? We chose Suncor deliberately as a larger cap oily name. It's been a better relative performance. So if you want to have oil exposure, I think Suncor is your go-to name. And we really enjoy what the uranium names are doing. Cameco, Denison Mines, NXC. These are all, and we chose Cameco as a relative leader in this space.
Can we take a look at Cameco? And we are right now. We've seen that roll over a little bit. Is it technical?
I mean, you're looking at a chart
significant rollover.
I think it's a consolidation. I mean, you always want to remind yourself that your chart that you have should have a rising 40-week or 10-week or 200-day, or 50-day average. And this is just sitting above those, and those averages are rising in both absolute and relative terms. That's a good trend following the stock.
Your loan name in consumer discretionary has had a lot of fundamental noise around it, but that's not your job.
No.
Is to kind of cancel that out and look purely at just behavior. What are people doing with the stock? Gildan.
We owned it last month, if you recall, right? We chatted about it when we were together, and the stock did perform well. I mean, did have, to your point, saga, and then managed to come right back. And as it stands, at the time we liked it. Our team likes it fundamentally, and it was a good technical setup for us. Our team still likes it, and we still like it in our process. So good name that we carried over. It does have a right backdrop for buyback. They're going to start, introducing as of next couple of weeks. I think that's going to be a positive buoy for the name.
You've got utilities, one pick in utilities, that's AltaGas. If I can be greedy, can you look at the utilities set up first, the TSX utilities, because they have done well? Is the breakout significant? Is it a mean reversion? What's going on? If I could ask the controller just for TSX utilities.
Right, for sure. I mean, we like the U.S. utilities, if I may say so, but I would say in Canada, we are starting to see early stages of a positive divergences that are typically the foundation of a base, if you will. And we're seeing it in Boralex. We are starting to see it in AQN, pardon me. We're seeing it in TransAlta slowly. But we go after leadership, and AltaGas is our leader in that space. But utilities in both U.S. and Canada are starting to show better base building characteristics.
I mean, you have the utilities, some of them.
And Nextero Energy in the U.S.
Are, you might want to wonder, do they have an AI chip that they're also selling? But some of them have done extraordinarily well.
To your point, it is an AI story to some of the data centers and whatnot, but I would say their trends are so strong. The relatives have turned on a monthly and quarterly, so it's difficult to step aside from that sector. You want to have exposure.
Because on a day like today, you're seeing an NRG or a Vistra pull back sharply. Does that just come with the territory when you've risen so quickly?
I think mean reversion is something you always want to assume, and something like utilities that don't have the type of momentum that they should when they rally, and that magnitude of rally does set up this stage for some mean reversion, but not negatively, in my opinion.